Today, we're focusing on the sale-leaseback market with Jason Fox, President and Head of Global Investments at WP Carey. So nice to see you here.
Thanks for having me.
Seems like there's been a lot of increased activity in sale-leasebacks. What factors are driving this trend, and what are you observing in this area of the market right now?
Right, I mean, a lot of this is driven by the low interest rate environment we're currently in, and of course the foregone conclusion that interest rates are going to be rising over the near future. Corporations are taking advantage of the low interest rates to lock in the rates on new capital for investment.
How are you seeing this play out in terms of activity and pricing in the U.S.?
Well, the U.S. remains quite active, but also competitive. I would say this year compared to years in the past, though, companies are really focused on certainty of execution as well as the ability of the investor to close transactions as opposed to purely on price. A lot of this has to do with the weakness in the CMBS markets as well as the volatility generally in the credit markets. There's also less capital flows coming into the sale-leaseback market. Some of this has to do with the non-traded REITs raising less money. There's also the recent stock price depression in some of the public REITs that have less capital available for these type of investments.
And how about in Europe?
Well, Europe remains at a different point in the cycle. There is cap rate compression continuing to happening over there, but we are still seeing good, attractive investment opportunities, especially given the costs of borrowing.
What are some factors a company should take into account if they're considering a sale-leaseback in this current environment?
Well, in this current environment, really in any environment, companies really do need to consider how critical the operating assets are to their business. Sale-leasebacks are long-term contracts, typically 15 to 20 years, and they need to make sure that this asset is going to be part of their operating business on a long-term basis.
Any property types or even locations that are particularly popular for the sale-leaseback model?
Well, typically sale-leasebacks have been very standard for single-tenant office, retail, and industrial. But more recently, there are trends towards more special purpose real estate, such as hotels, cold storage facilities, medical properties such as hospitals, educational facilities, among others as well. The important part with the special purpose assets, though, is to really focus on the length of the lease term, the credit underwriting, as well as the criticality of the real estate.
So the increase in sale-leasebacks that we're seeing, what does that tell us about where we are in the cycle, since these transactions are seen as stable, longer-term investments?
Yeah, I think that's right. Sale-leasebacks, really net lease generally, has a high visibility cash flow where most of the returns are baked into the income it produces as opposed to capital appreciation. So I think that tells you that investors are flocking more towards the safer investments in this current environment.
Jason Fox, great to talk to you. Thanks.
Thank you.
For The Deal, I'm Rhonda Schaffler.